Hi everyone, welcome back to Be Rich. It's me, Vinod, sitting in the studio late in the evening as the markets are closing, talking to you about what happened today. I myself today ended up buying late in the day because I was out with my brother. As you would have seen on the Instagram post, we had some podcast recording to do and all that reeled into my day, and my day rolled on. So by the time I got to investing, opportunity I saw was Zydus Lifesciences. Today corrected by quite a large margin, and I said, why not? I was initially going to go buy some more Natco, but then when I saw Zydus looking ripe for the picking, I picked Zydus. I did share it in the post. Those of you who had not had your Tiffin coffee, to thinking about considering something for the day, to look at Tiffin coffee. I had met a lot of you during an event yesterday at an office, and it was really nice to meet a lot of you. And the same concern and questions were there. One is about taxation. Should we take the old regime, new regime? It all really doesn't matter which tax regime you go to, because the way it's moving towards, all the benefits you had in your old regime really don't make sense. One of the main themes in the conference which we were attending and people were asking was, if we buy a house today, should we consider the tax savings which we get from it? We did try to stress upon that the tax savings are for today's loans and makes only sense for today. Tomorrow the government might change these rules, and all what you hoped and had ambitions of savings would disappear, because taxation laws keep changing year on year, but your home loan can last up to even 20 years. So please do not buy or take a home loan as a tax savings. There is really no savings in these things other than it being a burden in the long run. Inflation, like my brother says, is a tax on poor and the middle class of our society, and inflation finally bites in all of this. So keep in mind, when you do decide to take some kind of an investment thinking it's a tax break, there are really no tax breaks. You're better off looking at an opportunity to invest rather than trying to save tax through an investment. These things are just clickbait. They're supposed to entice you and make you sign on to some program. It's really not there as a tax savings. Another thing which a lot of you kept asking about was borrowing based on repo rate. Do remember, your loan lasts for 20 years, like I said. Interest rates, fortunate enough to take a fixed interest rate at a low interest rate, you can have that fixed interest rate for a long period of time. But nowadays, most banks do not offer fixed interest rates. They're all floating. Floating interest rates means as RBI changes the interest rate policy, as banks' interest rates go up, either your EMI will go up or your tenor will extend to compensate for the raise in interest. And they're supposed to do the same when interest rates lower. But unless you chase the bank to do it, most banks don't do it. They let you think you are still at a higher interest rate without you realizing that you can have a lower option. So again, these savings which you see, which are trying to entice you into taking a loan, I strongly dissuade you from it. And this current climate, it is not a great thing, real estate, because the real estate market is really overheated in India. Real estate prices are nowhere near where they should be to be considered as an investment class right now. Other than that, we have nothing against real estate. A lot of you think we are against real estate. We're not against real estate. We are against buying any asset class which is overbought, and there is no room for any kind of appreciation, capital appreciation. So that's the main reason we don't look at real estate. Other than that, real estate is a great investment if the price is right. This is also true in stocks. That's why I was looking at Zydus today. Zydus, if you look at the PE ratio and everything, all things considered, it's great. Why did the market react the way it reacted violently towards Zydus? Both Zydus and Lupin in US seem to have lost a court case, and there are some earnings implications because of that. These things are short term, they're not long term. Like I've said, if you have an opportunity to hold a company, invest in a company, you should think of at least holding it for 10 years or more. Another thing which I did try to explain to a lot of you who I met is, the thing about investing and wealth creation, it is not a complicated process. It is not something difficult. It is actually something very easy and very boring and very mundane. And in life, we are told these things like savings is hard, investing is hard, wealth creation is hard. It is not. And because the reason why I say it is not is not to poo-poo it and make it sound like as if it's nonsense. The reason is, when you say something is hard, you get a mental block and you prevent yourself from trying to go after it and achieve it. And it's important to tell yourself, yes, it can seem hard, but it's not. Forming a habit and sticking to it and making a routine out of it is not difficult. All it requires is a little bit of applying your mind and your conscious thoughts towards it, and then it starts developing into a habit and you do it. This over-analysis and diving into a stock over and over again, trying to find some kind of value when you don't need to, it is simple as anything I say. We have a list of stocks to consider. Are they in value? If they are in value, keep investing. For example, IndusInd Bank, when I was talking about it, you should look at it and keep it in mind, and I said keep it in your radar. IndusInd Bank was 650 rupees at an average cost. That's not even the low it went all down to. What was the low it went down to? The 52-week low it hit was actually 606, right? 3 months back, it was trading at 637 when I was asking you guys to consider it, and I said I was considering it. Today, it's going at 788. Opportunity. So, is it still at opportunity? Yes. Are you brave enough to invest? That's a question only you can answer. From the lowest lows it was at, it's up almost 25% in IndusInd Bank. This is how the market works. This is how opportunities arise. And you should look at these opportunities and see them for what they are and be brave enough. Of course, when I say brave enough, like I told a lot of you yesterday when I met you, I'm never expecting you to throw the kitchen sink. I spoke to a lady yesterday and she was talking about the same thing. When can we have lunch? Have we seen enough correction to go and have, a meal, full-fledged, full-day meal in the market? I said, no. I said, if you want to create wealth in the long term, you have to build it in small increments like this, and you will get there. I know it's very boring. I know it's very trying. When I say IndusInd is great, but when you do a Tiffin Coffee. Natco is great when you do Tiffin Coffee. Zydus is great when you do Tiffin Coffee. And all of you are eager to do more. And if you do have a lump sum within your reach, you have a lump sum, let's say 1 lakh or more, my strongest advice would be to consider some corporate bonds. And if it's a good rated bond and you get interest from that, take that interest and invest it in the market, because this way you preserve that capital which you have done. Yes, gold can be bought, but the problem with gold is, unlike a bond, gold does not give you a monthly or yearly return. It does appreciate in capital over the long term, but it doesn't give you this kind of a return on a monthly or the annual basis which you can take and reinvest in the market. In bonds, it gives you this interest which you can look at on a monthly, yearly basis, which you can reinvest and keep equity and debt as an option on your portfolio, and you can balance it really nicely. And in the long term, you can become heavily towards debt as you want more of a stable income which comes monthly. But these can all be strategized and thought about, and I can talk about a number of videos where we talk about this and that and how you can build it over 5 years, 10 years. But you have to do the boring task, the easy task of investing and logging on and doing it every day. If you look at something today, let's say you have a stock in mind and you see it in green, and because it's up by 0.5% today, 1% today, it doesn't mean it's gone out of value. There are very few stocks in our list which go in and out of value in a few percentage points. There are stocks which we can talk about, like Jyothy Labs, which can go from value and back into becoming expensive within a few days because it's sitting right at the border. But most of the stocks which we consider, like Tata Motors, Natco, Zydus Wellness, South Indian Bank, Karnataka Bank, there are value. So there's enough breathing room for you to wait for 1%, 2%. It doesn't matter this way or that way. And don't overtly focus on your average cost and more focus on investing a little bit today. When you're looking at a 10-year period or stretch of time, this 1% here, 0.5% here will all not matter. What will matter is that you've done these small accumulations over a long period of time. And I did a video on that about where I spoke about ITC. If I was blindly buying it every day, one stock, what would have happened? And how every day looking at my portfolio balance, I would have had mental anguish, some days it being up 8%, some days being down 4%, then sometimes being negative for some time and then being positive by 50%, then suddenly becoming negative in the same year. It happens. Stocks do these things. They're meant to do these things. But over a long period of time, you do compound rather well. And that is what is the essence of investing in this method, is to keep at it and keep it simple and keep going at it. Wealth creation is easy. But there's another thing which I did want to tell you is that I was looking at a post on Instagram on India Today feed talking about a man who has 2.5 crores all in FDs. My friend Mr. Arun behind the camera would love to be in his position. He has no loans, he has no EMIs, he has no debt, and he's got 2.5 crores invested, and it looks like a brilliant retirement plan. He's not married, he has no obligations, and he's depressed. Because you're led to believe that by creating this wealth, like Mr. Arun, that all your problems are wealth related, money related. It is not. We use the lack of wealth, the lack of money as an excuse to cover up other things in life. And when you achieve this wealth, it can expose the fact that you have other issues on your table. I would strongly advise you to have a balanced approach and have a good relationship with money and wealth. Wealth is great, but health is far more important. So invest as much as in your health, in your relationships, and in your wealth as you do equally on all of them. Like how you do Tiffin Coffee range investing in for making money, make Tiffin Coffee range investment in your health by doing a little bit of an exercise, diet and workout, and also invest in Tiffin Coffee range investing in relationships and building good friendships, because those are also important. Cultivating a good friendship, a good state of mind is as important as having 2.5 crores or 5 crores in your account in 7 or 8 years' time. Thanks for watching. Be rich. I know I went meandered here and there today, but today was a good day. Markets opened absolutely positive and then started correcting as selling pressure mounted. A day back, we saw the FIIs move in with a lot. We saw a complete greenwash. I think it was 6,000 crores they bought into while the DIs had some sale. But today, maybe it's reversed and maybe the FIIs have sold. This kind of seesawing will happen as Trump moves around plays around with his tariffs, because like how we invest in the American market as a hedge against the Indian market, that we don't want to have all our baskets here. Same way a lot in foreign institutional investors who are domestic markets for them is the US. They look at the Asian markets as a hedge against the American market, especially India, where most Indian companies are insular. They're protected because most of their market is domestic, like ITC, and all the banking financial companies are all domestic, and they do domestic lending, especially when the RBI is lowering interest rates. So they would probably look at it as an opportunity to invest here as a hedge too, maybe. So this is what I wanted to share with you today. Let's wait and see what Mr. Trump does today. As we go to sleep, the Americans wake up, and Donald Trump might decide to give the Chinese another shake, and we may see something interesting happening tomorrow. If it does, we see opportunities like how we saw in Zydus today. Do think about it in Tiffin Coffee range and don't get overexcited. The day when we can break our bank, I will definitely come out and be screaming saying, guys, go have a good time in the market. Thanks for watching. Be rich as always. Thanks for supporting the channel, and thanks for all of you who managed to meet me in the few events which I've been attending the last few weeks. I promise this weekend again, me and Dana will try and hit maybe Adyar and Besanagar Beach and try to catch a few of you there with me, Arun and Dana early morning, and wish some of you a happy morning in the morning as we watch sunrise together and take a few questions there live. Nothing else more to say. Have a wonderful evening. See you again tomorrow. Good night.